Hello, everyone. I hope you are all doing well and feeling ready for another insightful session on our XAUUSD analysis. I'm thrilled to have you join me as we delve into the market dynamics and chart patterns shaping the upcoming week's trading opportunities. But before we begin, let's kick off today's session by revisiting last week's structure and analyzing what our expectations were and how price action responded to it. And if you remember vividly, one of the key factors that we identified on the 4 hours time frame was this robust demand zone between the 2300 and the $2,285 area, which has been consistent for buying pressure since the beginning of the month of April. And one of the things we agreed here last week was that we'll continue to look out for buying opportunities as long as price remains above this demand zone, where the breakout of this descending trend line will be all we need to confirm the strength of the buyers in this market. And the only condition we said we will be looking at to sell was the breakdown retest of our key level at the $2,285 area to join a decline, which obviously never happened. So instead, we saw price breakout retested the $2,310 area, giving us the privilege of joining that uptrend move. And if you look at this, if you had only taken one position, you must have been able to scoop in over 500 pips. And remember that we did add multiple entries to maximize the potential of this bullish move. So, a big shout out to everyone who remained faithful to our analytical approach. Your dedication is truly commendable. Now, as we get up for the week ahead, it is crucial to acknowledge the shifting market dynamics, recent consumer sentiment data, and weaker labor market figures have painted a somewhat gloomy picture for the United States economy. While fears of an economic slowdown in the US remain subdued, the cautious approach of market participants has resulted in a surge in the demand for safe haven assets such as gold. Now, with increasing probabilities of a Fed interest rate cut, all eyes will be on the upcoming CPI data for fresh catalysts. Now, in light of this development, this video aims to explore potential market reactions in the coming week. As always, we will be leveraging on our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to gauge the potential trajectory of price action. But before we proceed, it is essential to emphasize that this presentation is purely for educational purposes and should not be considered financial advice. Forex trading carries inherent risk, so it is crucial to approach it with caution and seek guidance from a qualified financial expert. With that in mind, let's dive right into the analysis and uncover the opportunities that lies ahead. So, our first point of contact for this week will be the daily time frame as usual, as we do want to be having an holistic perspective into what is going on in this market. And what I did here on the daily time frame was to take into consideration the character of price action since the month of October of last year. And if you look at this closely, you will see that the market has been very bullish. And in fact, to support the bullish idea here, I connected the series of higher lows, giving us a couple of trend lines to work with. And of course, you know how we use our trend lines in this community. As long as price action remains above our trend line, we want to be looking out for patterns and structures that support the idea of buying. Now, in addition to this trend line is the key level for this week, which is duly situated at the $2,360 area, as you will see here. And this level here is going to be serving as a yardstick to guide our trading decisions for next week. And you know how we use our key levels in this community. As long as price remains below the key level, we look out for patterns that support the idea for selling. And if price climbs above our key level, we will be looking out for patterns to buy this asset. Now, look at what has been going on in this market in the last 3 to 4 months after price action tested that all time high area around the $2,440 level. We have seen a choppy market condition whereby price action has come back to retest the ascending trend line. A couple of buy pressure here incited an uptrend move last week, and exactly on Friday, we saw price action close around the 2,360 level, our key level for this week. And of course, if we go to as far back as the beginning of the month of April, you will see how that key level had played a major role in determining the direction of price action. Now, as it is here, we are at a crucial juncture where, depending on how how market participant reacts to this 2,360 level, will determine if we are going to be buying. In fact, I want to be looking out for buying opportunities above this structure to join an uptrend continuation. And in fact, if selling pressure persists below the 2,360, a breakdown of this ascending trend line could give us selling opportunities, maybe into the other ascending trend line here, which will be dovetailing to a minimum of 1,000 to 1,200 pips in profit. Now, with this setup here, I have been able to identify a simple structure that we can use to navigate that $2,360 area during next week's trading session. And of course, it is on our 4 hours time frame. But before we scale down to the 4 hours time frame, it's important that we keep tabs with the fundamental factors that will be influencing the sentiment in the market in this coming week. And by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. Now, based on these assets that we are looking at for this week, we will be focusing on the economic features from the United States. Now, the first high impactful event for this week is coming in on Tuesday, May 14th, and that is the Producer Price Index. Now, this is a very key economic data that measures the average change over time in the selling prices received by domestic producers, which obviously exclude volatile food and the energy sector. Then fast forward to Wednesday, May 15, we have a handful of events there. The first one is the Consumer Price Index, which it's an inflationary data. In fact, this is one of the major data everyone will be looking forward to next week. Has This gives us an insight into the inflationary pressure in the United States economy. And a higher than expected CPI data can lead to concerns about inflation, hereby impacting market sentiment as it may prompt expectations of tighter monetary policy to control rising prices. Then finally is the retail sales data, which is a key economic indicator that measures the total receipts of retail stores representing consumer spending. So these are the impactful events we will be looking forward to. And of course, as technical traders, we do understand that the anticipation of this event alone has a way of influencing the sentiment in the market, which will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame. Now, on the 4 hours time frame, what I did here was to consider the character of price action since the month of March, and this is the trend line we have here. Then another thing I would like to call our attention to is this descending trend line ever since price action tested the all-time high. We've seen series of lower highs in that regard. Now, look at what happened last week. Um, During the later part of last week, we saw that as soon as price action tested that descending trend line, we begin to notice some consolidation phase around that area, giving us a range bound structure. And whenever we identify a range bound structure, it more or less tells us that the market is going through an indecisive phase. And depending on how market reacts to this confluence, will determine if we are going to be buying or selling. So, during the early hours of next week, we are going to be looking at how the market will react here, how we're going to see continued selling pressure, leading to price breaking down the 2360. Then we will look out for selling opportunities. However, a breakout and retest of the trend line and key level at the 2360 will be all we need to continue the uptrend move. But trust me, I will be with you in the comment section of this video on Monday morning after monitoring price action during the first 8, 10, 12 hours of the week to give you my opinion on what may likely happen during the course of the week. If you have found this content helpful and useful in making your independent trading decisions, I really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and of course, it also helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.